Cathie, when you take a position like you have with Tesla, how much is that based upon the idea that you have a guy like Elon Musk at the head of all that stuff?
Well, we have a 6-point scoring system, and the first score is management. Management, right. People, and culture need a visionary management, especially when it comes to innovation these days, because these companies need to invest aggressively, as Tesla did in 18, 19, 20, in order to capitalize on massive opportunities. And in fact, with AI, it's winner take most right. opportunities. So they need to stand up to more traditional investors who want their dividends, their profits, their share repurchases now. So you'll not find many of those stocks in our portfolio. You'll find stocks like Tesla.
So does it bother you that the head of Tesla seems to be spending most of his time kind of involved with the federal government? Is that a knock on your sense of the outlook for Tesla? Or do you expect Elon Musk to come back full time to running his companies?
Yeah, so as I said, the first score is management, and we look carefully at what management is doing, how management is spending its time, and how a visionary leader like Elon Musk is surrounding itself by brilliant people who want to solve very hard problems. If you had listened to Tesla's last conference call last week, you would see how focused Elon is on any pain points or bottlenecks. So he's highly focused on getting this autonomous taxi network up and running this year, clearly. He's maniacally focused, it seems to me, more than I understood before listening, on humanoid robots. We've, in our big ideas, you'll see a section on humanoid robots, and we think that humanoid robots are going to benefit small companies more than large companies, which is a big change. But as far as Elon spending time making the government more efficient, I'm actually thrilled. And there's something that people do not understand about Elon. Elon understands that we are in the midst of a massive convergence among technologies, and that AI is the biggest catalyst among the 5 major innovation platforms evolving now. So robotics, energy storage, AI, blockchain technology, and multi-omic sequencing. He understands those convergences. He's involved in 3 of them. And data is the name of the game. If you look at all of his companies, they're all spewing out different kinds of data. That's proprietary. And that's the name of the game in terms of winning all kinds of AI races out there. And of course, the government is filled with data itself. I don't think that's why he's there. He's there to make it more efficient, and we're thrilled.
Cathie Wood, the founder of ARK Invest, has been a longtime supporter of Tesla and its CEO, Elon Musk. Before Tesla's earnings call, Wood often expresses confidence in the company's future growth, especially regarding its leadership in electric vehicles, EVs, autonomous driving technology, and energy solutions. She tends to focus on the long-term potential of Tesla, despite short-term market volatility. She often highlights Tesla's ability to maintain a competitive edge, improve its margins, and expand its market share globally. She may also discuss Musk's vision for Tesla's future, whether in terms of AI development, energy storage solutions, or the broader transition to renewable energy. Wood's ARK Invest often holds a large stake in Tesla, and she's been known for her bold price targets for the stock, sometimes forecasting it to reach significant valuations in the coming years. When it comes to Cathie Wood's perspective on Tesla's earnings, she typically focuses on a few key areas. Revenue growth. Tesla's ability to increase vehicle deliveries is a major focus. Wood often highlights how Tesla's market share in the electric vehicle space continues to expand globally, especially in key markets like China, Europe. Tesla's profitability has been a key point of discussion. While the company has historically had thin margins due to the high cost of manufacturing electric vehicles, Wood is usually optimistic about Tesla's ability to improve margins through advancements in technology, production efficiency, and scaling up its business in other sectors like energy storage and solar. Innovation. Wood often emphasizes Tesla's technological leadership, particularly its advancements in autonomous driving and AI. Any updates or progress on the development of Tesla's full self-driving FSD software are typically areas of focus. Battery technology and production. Tesla's ongoing work to enhance its battery tech, e.g., the 4680 cell, and reduce costs while increasing range is another important point for Wood. She's a big believer that Tesla's progress in this space will give it a significant edge over competitors. Musk's vision. Musk's ability to steer Tesla into new ventures and industries is another area where Wood shows confidence. Whether it's the energy division, solar and battery storage, or new vehicle models like the Cybertruck, she tends to underscore Musk's long-term vision for sustainable energy solutions. Shares of Tesla were moving higher today, overcoming a weak earnings report after CEO Elon Musk spent much of the earnings call pumping up the stock and making big promises about autonomy. The stock was up 4.7% on the news. It looks like investors are buying into the autonomy story. Tesla's fourth quarter numbers were disappointing, and the stock was down initially after hours when it reported earnings. For the full year, Tesla reported a decline in automotive revenue, and in the fourth quarter, overall revenue increased just 2% to $25.7 billion, which was well below the consensus at $27.1 billion. Automotive revenue was down 8% to $19.8 billion in the quarter. On the bottom line, results also disappointed, with operating margin down from 8.2% to 6.2%, while adjusted earnings per share rose from $0.71 to $0.73, missing estimates at $0.77. Despite the weak results, investors still bid the stock higher after Musk made bold promises around autonomy and told investors that the stock could eventually be more valuable than the next 5 valuable companies combined. The Tesla chief continues to be an evangelist for full self-driving and Tesla's autonomous vehicle technology, saying that 2027 and 2028 will be ridiculously good. He also said of the technology, "The only people who are skeptical are those who have not tried it." Musk and the rest of Tesla management spent little time discussing the automotive business on the earnings call, instead focusing on autonomy. Tesla didn't give specific guidance, but it did call for the vehicle business to return to growth in 2025, though it noted it wasn't fully switching new production to its next-generation platform, which means it won't be able to lower costs as much as it hoped. The company still faces a lot of uncertainty in 2025, but investors seem to be buying into the autonomy story. If Tesla can take steps toward full autonomy, the stock could move higher, though it still faces considerable downside risk. But Tesla expects its core vehicle business to return to growth in 2025, the company said in its earnings presentation. The company also announced it plans to begin production next year on its Cybercab driverless taxi vehicle and to begin making its less expensive cars in the first half of 2025. The market reaction was a roller coaster. Shares dropped 5% in after hours trading Wednesday, building on a 2% decline during regular hours, before reversing to a 5% gain by Thursday's market open, as investors seemingly oscillated between the disappointing Q4 financial results and the positive production updates. Tesla stock was up more than 4% by late afternoon Thursday, a whipsaw that befuddled even the most established analysts on Wall Street. Morgan Stanley analyst Adam Jonas questioned in a note to clients, what else may be at work driving the debate around the stock? While JP Morgan analyst Ryan Brinkman's recap note questioned why Tesla shares somehow gained as much as they did. I'm not saying it's an easy path, but I see a path for Tesla being the most valuable company in the world by far, Musk said on Wednesday's earnings call. There is a path where Tesla is worth more than the next top 5 companies combined, Musk added. Tesla is the world's 8th most valuable company in the world, with a $1.3 trillion market capitalization, while the 5 biggest firms are worth nearly $15 trillion in aggregate. The highly optimistic Musk also teased the idea of a $10 trillion revenue opportunity for Tesla's Optimus humanoid robots. The move higher in Tesla shares bore no relation whatsoever to the company's financial performance in the quarter just completed or to its outlook for growth in the coming year, wrote Brinkman, who added Tesla's share price has become completely divorced from the fundamentals. Musk did not address some shareholders' conflict of interest concerns on the Q4 earnings call. The Tesla Shareholders Forum used for earnings call. Questions include more than 100 questions on Musk, including ones asking how Musk's role in the White House cuts into time with Tesla, and if Tesla has lost sales due to Musk's outspoken views, though none on Musk's political activities were answered Thursday. Tesla, the most valuable automaker in the world valued at over $1 trillion, did not pay any federal income tax last year. Tesla's annual financial report, released this morning, shows the company enjoyed $2.3 billion of U.S. income in 2024, on which it reports precisely zero current federal income tax. Over the past 3 years, the Elon Musk-led company reports $10.8 billion of U.S. income, on which its current federal tax was just $48 million. That comes to a 3-year federal tax rate of just 0.4%, more than 50 times less than the statutory corporate tax rate of 21%. Tesla saved $500 million in taxes last year using accelerated depreciation. Tax breaks for executive stock options shaved $250 million off the company's tax bill. Unspecified U.S. tax credits were good for $300 billion of tax savings. Musk's company also used net operating losses to offset current year income, although it's hard to know how much of that affects U.S. income rather than the company's far larger foreign income. Congress might give Tesla even more tax breaks. A bill passed by the House of Representatives in the previous Congress would have retroactively reinstated a provision allowing full expensing of research and development expenses, which could save the company up to $2.4 billion in taxes.